Hey guys, this is Invest Nivesh here, and today I'll be talking about 10 things to remember before investing. So let's begin. So the first thing is to create a contingency fund, which will be helpful if your income stops due to a particular reason. Let's say you lost your job, or basically there is some loss in your business due to which there will be no income for next 5 to 6 months. So for this purpose, a contingency fund will be really helpful. And I will recommend that at least 5 to 6 months of your monthly household expenses, all relevant expenses, should be kept in a contingency fund in form of a liquid fund. So basically, in liquid fund, there is an option that you get more interest in your money which is parked in from your savings account. As saving account can give max to max 3.5 to 4%, liquid fund can give as high as 7% per annum. And the good part about it is like there are now some liquid funds which is available which can give you an instant redemption facility. So what I will recommend you is that you create a contingency fund to start your invest before you start your investment. So the second important thing to remember before starting your investment is to have a health insurance. Health insurance basically helps you in case anything happens to you and you are hospitalized or some medical bills are which are like occurred due to some sickness, a big amount which is spent in case of your health illness. So health insurance will help you in those situations, and the risk cover. Like the amount which you are going to pay to get the health insurance is very minute in terms of the risk cover that health insurance is going to provide. So I will recommend that you should have a health insurance. I won't say recommend, it's mandatory to have a health insurance before to start your investments. The reason behind is that all your financial investment will get impacted if you don't have a health insurance. Because if anything occurs and all your investment goes to your paying your medical bills, so all your goals and all the necessary dreams which you have will get impacted severely. So I will definitely recommend you to have a health insurance of at least 5 lakh rupees of individual cover, or at least 10 to 12 lakh rupees of your family floater cover. This will help you to secure your family as well as individually. So now there will be two scenarios wherein, like, if you are working in some company, maybe they are providing you health insurance. Even after that, I would recommend you should have your own health insurance cover. Reason behind is that in case you lose your job and then you go and find a new health insurance, and in case you didn't do that, then anything had occurred in that point of time, all your health insurance expenses will be then paid by you, because at that point of time you might not have any health insurance because you don't have a job. The health insurance remains with you only till you have a job. So health insurance is very much necessary, and also people with having a business background, definitely they should have a health insurance cover, and it should be more from someone having working class people. So definitely health insurance is mandatory. So third important thing is to have life insurance. Life insurance basically will help you in case anything occurs and you're not no more. Your dependents will be financially secure. So basically there are two types of life insurance which are available in the market. One which has a pure life insurance product, which is like a term plan wherein you are paying your premiums every year and there is no money back option, in which basically if anything occurs then only you are going to get the sum assured money, or else you won't get any money. The second type of life insurance policy available in the market, which has a money back option as well as an insurance cover. So I won't recommend you to go with the product which gives you both the purpose. Reason behind is that the purpose of life insurance is to make financially secure and not to make financial investments. You should keep your investments and insurance totally different. You should not club those investments and your insurance. That will not serve both your purpose. Like the policies which are available in the market, you will be required to pay a lot of high premium, and the insurance cover will be like very minuscule. Just to give an example, people are paying as high as 10,000 rupees a month and are getting just a cover of 10 lakh rupees. But though it has a money back option, but you will be getting a 10 lakh rupees term cover as low as 2 to 5,000 rupees a year. So it doesn't make sense to invest so much money in a life insurance which has a money back policy. It is better you should go with a term plan, and the term plan should be based on your income style and also your lifestyle according to your city where you live and the expenses which typically occur in your area and the number of dependents you have also. So I will recommend at least 50 lakh rupees term insurance you should have, and nowadays you can easily find term insurance online. So the term insurance is very much necessary to start your before you start your investments. So the fourth important thing is to identify your goals. So goals are necessary so that before you start your investment, if your goals are identified, then you will be based on your corpus which is available with you every month, or basically the corpus which you have created throughout your life. That money is invested in a smart manner so that your goals are achieved and also you are financially secured. So there will be several goals in your life. So I've given some few examples. One is like you will require certain amount of corpus for your retirement, or buying a new house, or for children higher education, or for marriages of your children when they become a particular amount of age. Maybe if you buy a new car for your family trips, or even for your own marriage if you're not married. So goals are necessary in life, and based on your goals your investment decisions are made. So I will recommend you to first identify your goals and then decide where to invest. So the next important thing is that you should have a particular time horizon in mind for each of your goals. So reason behind is that if you have more duration, then you have ability to take more risk. Because if you have taken more risk, then definitely you will be rewarded at some point of time. So different people will be having a different type of horizon for the same kind of goal. For example, there will be people who will be waiting for at least next 10 years, 20 years to buy a new home, but there will be someone who want to buy a home in, let's say, next 5 years or next 7 years. So goal based investing is important, and also goal based investing along with the time horizon required for each goal is also required before you start your investments. So the next important thing is to clearing all your liabilities before you start your investments. The reason behind is that many people have taken loans such as personal loans, credit card payment, or taking EMI for buying high impulsive purchases. So this will seriously impact and ruin all your investments. So I would recommend you do that. You reduce your liabilities in such a way that the maximum corpus you are saving should be going for your investments and not for your liabilities. So the lesser the liability, more the probability that you will be able to achieve your goals. So the seventh most important thing is to analyze your expenses. You should find out ways through which your expenses can be reduced with limited changes in your lifestyle, and also to increase your investment corpus. So lesser the expenses, the more the investment corpus you will be having. That will help you achieve your all your goals which you have, and so that you're also financially secure, and also you're paying off all the expenses which is actually required. So the eighth point is risk taking ability. Returns are decided based on the risk the investor is ready to take. So basically, if your age is on your side, your age is less, then definitely your risk taking ability is more. Also, if your investment duration is high, then definitely you can take more risk, because over a longer period of time, your investment will grow in a such a way that your risk will be adjusted overall. So the next important point is direct investment vis-a-vis through an advisor. So I won't say that one is better than the other or another is better than the other. The reason behind is that it is based on your overall decision making, that whether you want an advisor consultation over a period of your time of your investment, or else you are more aware in terms of you can do research on your own. You can manage your portfolio by checking or on a regular basis or regular time horizon, and you can then take a decision based on your research or based on your understanding whether to modify your portfolio or adjust your portfolio so that your returns which you are expecting are able to give on a longer period of investment duration. So I will say that if you want to go to an advisor, it's better that you decided at this point of time, vis-a-vis going through a direct investment initially and then over a period of time failing to get a good return, then moving towards an advisor route, and that will create a lot of problem. So I will recommend that whichever way you want to go, whether direct or through a financial advisor, choose it at this point of time and not at a later stage. So the last important thing is to start investing and diversify. So identify various investment opportunities based on your time horizon, your goals, based on your risk taking ability in order to financially prosper in your life. So thank you for watching this video, and if you like this video, please hit the like button, and if you don't like the video, please hit the dislike button. And if you have any questions and queries regarding this video or regarding any investment opportunities, you can give us your feedback in the comment section, and please subscribe to my channel for more such videos. Thank you.